Hey guys, this is JJ Andy from On Base Mode. Alright, so welcome to the channel, welcome to my YouTube channel. And so today the topic is very simple, okay? But it's huge. It's one of the main analysis that a lot of people uses throughout the history of trading. and so it's gonna be on technical analysis 101, alright? Or the basics of technical analysis for the crypto market. Alright, now there has been a lot of requests asking me to do this particular episode, and Ryan Crypto Grinder asked me, hey, Andy, why don't you do an episode on technical analysis, and help people see for the information, and because there's a lot of different technical indicators that one can use, and so here I am, humbled, grateful that I have this opportunity to share this all information with all of you openly, and the thing is, I'm gonna do a little bit of disclaimer right here. Alright, now whatever I'm gonna share with you is based on my 4 years of experience in terms of trading. There are a lot of methods, there are a lot of confirmations you can do, there are many different combinations that you can do. Well, for me, I love my trading to be as simple as possible. I use the KISS model, keep it short and sweet, simple, so it doesn't cloud my judgment. Alright, and so I'm gonna share with you what I look at, how I look at things in terms of technical analysis, and how I make things as simple as possible. Alright, so here we go. Now, so I've prepared a few charts beforehand, and so I just want to show you what is it or how is it gonna be like, right? So the first chart that we'll be looking here is actually Golem and versus Bitcoin, right? And this is a 1 hour period chart. Now, it all depends on what. Okay, this is the first tip of the day. Okay, now please, if you are a swing trader or a day trader or a position trader, please, you gotta, or even a scalper, you gotta know what kind of trader you are. Well, see, this is not my first video, right? But on my first video, the part 1 of 3 series, I did touch on what type of traders you are. Now, that particular video, it's very important to watch. Now, if you don't have a strong fundamentals or foundation as a trader, and you're very new to this market, please watch that video first, alright? Now, why am I saying so? See, a scalper, a day trader, a swing trader, and a position trader would be looking at different periods of a chart. Alright, now I used to be a fan of scalping, right? I used to come into Forex as a scalper, seeing all the profits, small profits here and there, and I was really excited about it. But the thing is, I started moving, alright, because I was in a full-time job, I was busy, I started moving to a day trading purpose. So I trade Forex on a daily basis, on the weekdays, and I go into a trade in the morning and get out at night. So that's day trader. Now, of course, as a day trader, you won't be looking at charts, say 15 minutes to, 30 minutes or 1 hour. You hardly look at that, yeah? 1 hour, yes, that's the maximum you can go. As a scalper, you'll be looking at 15 minutes, 5 minutes, 30 minutes, short, fast, rapid movements. But the problem is, in a crypto market where it's really so volatile, exchanges, are limited with and they're laggy. And when the market cap is only 100 billion, it's really tiny as compared to other markets. You wouldn't want to be scalping. You wouldn't want to spend 6 to 8 hours looking at a chart every single day and just scalp the market. Now, no, this is ridiculous. Alright, and if you are watching this video and you're doing that, 6 to 8 hours looking at a chart, scalping for say 5 minutes or 15 minutes trying to earn that small little profit, don't. It's a waste of time. Alright, and you affect your family time, you affect everything, right? And you have to give out a lot of time just to do that. So don't. Moving on, move to a day trader. Alright, so if you are a scalper, please get out of that circle, get into a day trader mode, right? So when you're a day trader, you would be looking at anywhere between 1 hour to 4 hours chart. Well, people argue they look at 6 hours, 8 hours, it's fine, go ahead, right? So as long as you find a chart that suits you in terms of day trading purpose, it's good. So this is the rule of thumb, alright? And this is after I've been through a lot of reading work, a lot of research, a lot of technical analysis reading. And this has surfaced quite a few times. Alright, now this is one tip. Okay, so let's just look at Golem. Okay, I'm just using Golem as an example here, right? Now, okay, so we are looking at 1 hour chart here, right? Now, this is what you need to learn, okay, as a day trader and above. Alright, you must be looking at 2 charts here. First is the 4 hours chart. Now, the rule of thumb is it has always got to be 4 times later. Alright, so let's say you're looking at 1 hour and 4 hours, that's your chart. If you're looking at 15 minutes an hour and 1 hour, that's about 4 ratio as well. So you should be always looking at those figures. Alright. Okay, so we are looking at a 4 hours chart right now, and letting load. Alrighty. Okay, so we are heading to the 4 hour chart. Yeah. Okay, so this is the 4 hours chart, right? 240. So remember, as a day trader guideline, it's a trading technical analysis guideline, you would be and you should be looking at anywhere that's 4 times the difference. So 1 hour and 4 hours chart. So when you look at the 4 hours chart, basically in a bigger time frame, it has less noise, it is more smoothened in terms of the curve, or in terms of the arc, or in terms of how the candles behave. And when you're looking at that, you tend to see the overall trend, right? Now, of course, when we look at Golem Bitcoin per se, if you were to zoom out, you could see that it was on a rise, right? And you will be able to see it more apparently or in a clearer view when you're looking at daily or weekly. Okay, that's a very good representation there. But what does it mean by 4 hours chart? Now, a lot of people has been asking me, what does 4 hours means, right? Now, 4 hours is a very simple logic. Every candle here represents 4 hours period. So take for example this green candle right here at the last end, this long day, it actually represents a 4 hour period, alright? And every candle here represents 4 hours. Now, if you're looking at say a 5 minutes chart, right, that will mean that each candle represents 5 minutes, and it's a lot of volatility, it's a lot of noise, it's a lot of things that will disrupt your mental thoughts. So I would never go to that level, alright, never. Now, what I'm gonna demonstrate now, okay, it's how normal people set up their technical charts. Okay, now I have seen many people setting up their charts. I have seen terrible ones, I have seen good ones, I have seen confusing ones, but the bottom line is, and the most important thing you gotta understand here is this. Now, I'm not here to compare or to contrast with what you have. All right, if whatever you're using right now works, perfect, use it. All right, but why am I trying to do this video, or why am I trying to clarify is in this video is that you gotta find a technical analysis method that suits you and you alone. It's crafted for you. There's no point comparing your methods with others, because then you're comparing like an apple and an orange. All right, I mean, people like apple, people like oranges, and there's no way they are dissuading each other from buying it, right? I mean, if I love apple, I don't want an orange, fine, right? Just leave it as that. So I'm not here to compare what technical analysis works. It works, most indicator works, but it's a combination of indicators. You gotta understand that point, all right? So you gotta find something that suits you, okay? So what happened is this. Now, if you're new to trading, this is what's gonna happen. I'm gonna walk you through this, all right? So people that come into trading, right, they have no idea what's technical analysis, okay? And they go haywire with that. And when they're, I mean, this is in general for almost all instruments, all right? And they look at a chart. And they sign up for this program, it costs about $1,000, about $3,000, and when they are there, they learn about 3 indicators. Okay, blah blah blah. Some indicators work, some indicators don't. Alright. So what are the common indicators that all this guru so-called preach? Okay, I'm gonna give you some clues here. Alright. So they're gonna talk about, hey, so some of the good, okay, as you can see, there are many indicators here, right? I mean, so some of the gurus say, okay, one of the best good one, what we call Bollinger Bands. Okay, so this is Bollinger Bands, all right? And so when the chart touches that point, you can sell, and you will go through correction. It's a very good indicator. Okay, now also a lot of people talk about Ichimoku Cloud, so I'm gonna add Ichimoku Cloud here, all right? And I am not exactly I have not researched into Ichimoku Cloud, but I think it's good, all right? And a lot of people look at Parabolic SAR. This is suggested by my neighbor next door. He said Parabolic SAR, it's a very good indicator. You can see a lot of dots, very good. And so then as we move down the list, yeah, I mean, then some people say, okay, you gotta add in MACD, right? MACD gives a huge, nice histogram for you to see. Yeah, it's awesome, okay? And then, at this most important juncture, I'm supposed to draw a trend line, but I have no idea where to draw, okay? So what I will do is this is one important move, all right? I'm gonna put a Fibonacci retracement right here at this point. Okay, since it's a 4 hour chart, it should be quite accurate, right? Okay, I'm gonna draw it to the bottom right here. Okay, and perfect. Voila, I got the perfect chart. Okay, and at this point in time, I am more confused than ever. All right, now, so this is a fundamental mistake. Why? Because this is not me. This is not my chart. I don't understand what's going on here, right? Many lines, and so a lot of times, hey, people are going through this cycle on a daily basis, all right? And I understand a lot of you who are very new to trading and you have no idea what's going on, and you're just listening from your friends who you know are slightly trained in technical analysis, and then they tell you, hey, you gotta use this, you gotta use this, you gotta use this, whatever, all right? But you know, the true experts in technical analysis doesn't use more than 5. Okay, at most 3. It's a tough squeeze into 3, but they will never use more than 5. So if you're using 5 on your chart now, please reduce it. Okay. Now, number one reason why you want to have less. Number one is you will cloud your judgment. So every single chart I look at right now, you know, it's fast movement. I can make a decision in say 3 minutes. I don't even need to look at the chart and analyze each by one. See, if you have a chart like that, I will need to go through Bollinger Bands to see whether it has hit the high point. I need to go through Ichimoku Cloud to see whether it makes sense. I have to go through SAR and see whether the point has touched that particular button here and there. And I gotta look at the volume, whether the volume is high or low, and I need to go to MACD, right? So let's say I'm not happy, right? I want to look at the relative strength, you know, of the chart. I want to add RSI in, right? It's relative strength index, and this is a lot of, you know, so-called guru preaches about RSI. I used to use RSI, but I'm not so big on it right now. Okay, there's a lot of reasons why, you know, if you want to know more, you know, consult with me privately, all right? And I'm going to tell you more about indicators each. So what I used to do when I first started out in Forex trading was I read up on one particular indicator, and I used that particular indicator for that week. I tried, doesn't work out, next indicator. And that's the reason why I know how each indicator function, because in the back of my mind, I used to use it before. I know how how to use it roughly, all right? But I'm not here, like I say, to argue with anyone. If you have something that works for you, cool, all right? You can comment below and just share with us, you know, what the kind of indicators combination that you do. But on a personal viewpoint, I don't use anything that's more than 5. Okay, I will show you how clean my chart is later. Okay, no worries about that. So like I say, people will go through each by each. Say Bollinger Bands, Ichimoku Cloud, SAR, they go through MACD, go through RSI. Okay, finally, we're gonna take an order right here. Okay, so this is the thought process that a lot of people go through. Okay, like I say again, I'm not the kind of guy. I'm the KISS guy, right? I want to keep it short and sweet. I want to keep it simple. Okay, and so every indicator. Okay, so this is just a little brief introduction about the indicators. Okay, now every indicators have its different usage. Okay, and it will take you a long time to study through everything, and they have a lot of history to it, all right? And of course, some of them are named by their own founders, so it will take you a lot of time to really just understand it. There are many ways to look at things, but the way I classify things is quite simple. See, there's a few ways to look at it, right? One, okay, let's say 3 to 4 categories of technical indicators itself. The number one is called a moving averages, right? It basically, and moving averages category basically smoothen out the curves, smoothen out all the action and all the noises, and gives you a very nice curve, right? So these are all the moving averages, the simple moving averages, the exponential moving averages, EMA, SMA, MA cross, okay, things like that. It's all under this category. A second category, it's called momentum indicators. In terms of oscillators, in terms of MACD, in terms of stochastics, it's all under this category. Basically, it gives you a faster movement, but it has lesser accuracy, all right? Moving averages, on the other hand, gives you a good accuracy, but very slow movement. See, the chart candle could already have a huge panic sell before even moving averages gives you that good indicator of crossing that line. So, things like that, okay? Now, the third one is in terms of volume. Some indicators here measure the volume, the relative strength. Say RSI example, it measures that strength for you. It lets you know how strong it is. The other kind is more like reversal. Okay, they tell you the last kind, right? It's more like reversal. They tell you where's a good retracement level, Fibonacci retracement. This is something that I love to use. Or they tell you where's a good reversal, where's the momentum breaking up, and that's something like parabolic SAR. All right. And so there are many kind of categories here. I'm not gonna go into depth, all right? I mean, if you want to know more, you know, talk to me, PM me, whatever. But it's gonna be tough understanding everything. So I'm not gonna ask you to understand everything, but just to understand a few important ones. That's it. Okay. So what I'm gonna do now is I'm gonna show you how I look at my chart typically. Okay. And you will see my charts are always very, very clean. And something that I learned is to always keep it clean. so that judgment will be clear, right? And because of that, my tradings are more sniping style. So you snipe and you get it done. All right. Okay. It's funny, my chart are not loading. Okay, give me a minute. Okay, brilliant. So I found my ETC chart. All right. So this was something I prepared beforehand, and it's kind of very easy to draw. Yeah. Now this is a very simple chart. It's ETC versus USDT theta on Poloniex, right? And so what I did on this chart was very simple. The volume, it's originally there, so I left it. I didn't touch it, and I just draw a trend line that's here just to see where's the support. And I draw a Fibonacci retracement and I put in my stochastics. Now, of course, I have different settings than the default ones, but this is the one that I use. All right. So this is just one kind of combination that I do, and it gives me a good indicator in terms of retracement. And of course, it gives me a good indicator of where the chart is going. All right. Now, I'm not saying that this is a confirmed work guaranteed kind of idea here, but this is just something that I do. So I'm not here, like I say, to argue with anyone in terms of what kind of indicators you use. You can use anything that works for you. This works for me. All right, cool. So when we look at this chart, it's very simple. First, I draw a trend line to establish where the trend is going, whether the slope is high, low, you know, it's steep, less steep, yeah. So I know when's the breakaway or when's the breakout gonna be, when's the momentum gonna carry on. See, retracement gives me Fibonacci. You know, a lot of things in this world works by Fibonacci algorithm, and they respect that. So understand these main fundamentals when it comes to technical analysis is this. See, your technical analysis only works if there's a huge adoption around the world. Let me clarify that. Example, say no one in the world uses Fibonacci retracement. No one in the world uses it at all. Okay, or even just say me, I'm the only guy using Fibonacci retracement in the world. Now, of course, I know there are some Fibonacci retracement supporters here, yeah, but imagine that with me, right? There's only me using Fibonacci retracement. See, at that point in time, you realize that the prices will not reflect as much or will not respect that particular point or particular level because no one's using it. No one's going to respect that level. There's no huge adoption going on, and that indicator is not going to work. Take another example. If I use Bollinger Bands here, and no one uses Bollinger Bands here, I'm the only guy using it, the prices won't respect that. It will break out of Bollinger Bands and stuff like that. But of course, Bollinger Bands has a lot of history. I think 20-30 years of history. It works, all right. But that being said, I don't like to use it because I don't like too many lines on my chart. Fundamentally, I'm a price action guy. I look at candlestick a lot, and candlestick's my good friend, tells me a great story. And that's all I do, and the rest is just more of a supportive role. So stochastics give me a good indicator of relative strength, RSI, and it gives me an indicator of where the chart is at, you know, whether it's a peak, whether it's not. But I don't use it to take a trade. I use it as a confirmation of a trade. So whether or not I will take the trade in terms of day trading, I use that. Okay, now of course, if you want to talk about swing trading, that's another knowledge on its own. I use a different set of tools and stuff like that. So, and I could be looking at a different chart. So, all in all, why am I trying to emphasize here? The most important thing is this. See, none of the method works unless you work, unless you understand what's going on, unless you really read through and know each indicator like a friend, or even like your parents or like your kids, right? Or like your children. So you gotta know what they do. You gotta know the history of it, and so at the back of your mind, you know what's going on, and how they interact with each other. That's good. And how you diversify into all four different kind of categories. That's important. You do not want to have just all volume. It doesn't make sense. What can you see from all volume? Nothing. What if you have all momentum indicators? Then you'll be having a very risky play. You're going to have a lot of, you know, volatility here going on. If you're looking at just say Bollinger Band, parabolic SAR, you will just be decorating your chart with a lot of lines, a lot of dots. But at the end of the day, can you make that fast, snappy decision that you can make a good decision? That's another thing. But looking at my chart here, I could easily get in at any position based on the retracement, based on the trend line, based on the volume, based on the stochastics. It gives me a very good confirmation here and there. And this is just one of the tools or one of the format that I use. And I mean, it's not exhaustive, right? I mean, I'm always improving on my technical skills. I'm still learning as of date. But before even you touch on technical analysis, and knowing which tokens to buy into, you gotta look through the fundamental analysis. People see, a lot of people just believe in technical. Yep, no doubt about it, it works. Yeah, technical people will argue with me, only technical works. Yes, I respect that. I mean, I've been doing technical trading for a while, but there are another school of thought that's why not you combine fundamental analysis and technical analysis together. Yeah, wouldn't you get a better reading? See, trend is a friend, never go against the trend. That's the main rule when it comes to technical analysis, and that's the main rule when it comes to trading. A lot of people just want to short, have that income gain, capital gain, and that's it. But more importantly is that you gotta understand that if you know that that token is strong, it will survive through whatever months that's upcoming. Yeah, and with that knowledge, you know that, hey, okay, technical tells me this, enter this position, entry order, and whatever. It gives you a better understanding of the chart itself. All right. So technical analysis is really very good in terms of entry order and selling order and taking profit. But fundamental gives you the knowledge as to which token to invest ultimately. So it's a combination of skills here. There is no way you can just trade on one analysis, especially in a market that's with market cap that's really, really small. And also because the exchanges are not up to par yet. Well, they're either lagging, you can't log into them, and there's a lot of big hoo-ha and issue on them. So you gotta be even more aware of that, right? In fact, in the this coming month, I don't foresee myself taking a lot of trades. In fact, I think I'll just take more than maybe about 10 trades. That's it. It's either a sell order or a buy order, but it's just gonna be 10 trades in one whole month. I'm gonna sit out of VIP 148. I'm gonna let the dust settle. But I'm gonna store, I'm gonna keep some USD Tether just on the side, to get into certain tokens that I like, and we're just gonna hedge against a pullback that might happen. All right, so coming strategy wise, yeah, we will talk about it a little bit more in the upcoming weeks. And so if you like what I shared and you want more in-depth details when it comes to technical analysis or even fundamental analysis, do sign up or do click the Facebook group below. Yeah, do join my Facebook group. And from there, you can PM me, you can talk to me, and I'm up for private consultation, all right? So I've closed my June masterclass. I'm starting my July masterclass just for the special few people. I'm going to keep the group very small to 10 to 15 people, and we will discuss a lot of issues, when it comes to crypto market. All right, and so that's for private consultation. All right, so thank you for tuning in. I hope you get a lot of value from just this video alone. Hit like, comment, subscribe below, and hit the little bell, and that gives you a good notification when my video is up. All right, so I will try my best to do at least 1 to 2 videos a week. Yeah, and on technicals, on your fundamentals. All right, so in the upcoming weeks, do take note of my video that's upcoming on YouTube. All right, so thank you for tuning in. Appreciate that, and take care.